Hey guys, this is Nick from ForexForNoobs.com with some daily analysis. Today is Tuesday the 29th. How is it the 29th already? How are we at the end of the third month of the year already? We've already gone through a quarter of 2016. When I was like 10, it would feel 3 months would feel like 10 years. Now 3 months go past in the blink of an eye. I'm turning 30 next month. April, I'm turning 30. I'm exiting my 20s. My 20s are over. I'm going to be entering my early 30s. And wow. I'm already getting white hairs, you know. Like I look in the mirror and there's 1 or 2 white hairs in the mix of, normal dark brown. I just see 1 or 2 white hairs there. Turning 30, getting white hairs. I'm getting old. I know a lot of you are older and you're going to be saying, Nick, you're still a young man. Don't be silly. But hey, to me, it feels like, where did my 20s go? But anyway, that's beside the point. Let's get to the point, which is analysis. Today, we're going to be doing some analysis. One thing that I want to start adding to my analysis. Now, you'll know my trading strategy tends to be kind of boring at the start of the week. So, your Mondays, Tuesdays don't tend to get many trades on Monday, Tuesday. So my analysis on Mondays and Tuesdays, well, I don't really do much analysis on Mondays usually. But my Tuesday analysis, usually we don't really find any potential trade setups. I'm pretty sure we're not going to find any today because I checked about 4 or 6 hours ago and there was no potential setups. So I wanted to start adding something a little bit new to the analysis. If we go through all my pairs in this analysis and we don't find any potential setups, then I'm going to find something else to talk about. Just something interesting, just some, thoughts from a successful trader. Let's just call it that. No, that's a pretty crappy name. I don't even have a name for it, but I'm just going to talk a little bit about price action, trading psychology, money management, one of those subjects, just to make this more interesting because, I don't want you to sit here for 10 minutes going through analysis, not find any potential setups, and then just leave with nothing. So if we don't find any setups, I'm going to talk about something like trading psychology, money management, something like that, or price action, of course, which is my biggest strength. So yeah, let's get started with the analysis. But I'm warning you right now, we're probably not going to find anything. 6 hours ago, I had a look through and there was nothing really potentially forming. Now, for those of you who are new, a little bit on how this analysis works. Basically, I go through each and every pair on my list. Well, almost each and every pair, most of these pairs on this list. And I look at each and every time frame for these pairs. The reason I do that is because if I do this several times per day, let's say every 6 hours, 8 hours, depending how busy I am on that day, it ensures that I very rarely miss a trade setup. Because I'm doing this several times per day, I get to see almost every candle forming on, let's say, the 6 hour chart and above. And that means that, I rarely miss a trade because I see almost every candle forming. And, I might not see every single 4 hour candle forming, but I'll see most of them. So I'm unlikely to miss a trade on the 4 hour either. So this is just a process that I go through several times per day. And it allows me to catch most price action setups. So what we're doing here is we're just scanning our charts for price action setups. One quick thing about timeframes. You'll see a bunch of weird timeframes up here. I don't trade all of these timeframes. So the 5 hour, the 7 hour, the 9, 10, and 11 hour, those are timeframes I do not trade. I only use these timeframes because it splits candles up into different sizes, and that allows me to better read and understand what price is doing. Because that's what's important to a price action trader. What is price doing? And the more information I have on that, the better I can trade price action, the better I can read price action, which is why I look at all these weird timeframes. The only timeframes I'm actually trading are the 3 hour, 4 hour, 6 hour, 8 hour, 12 hour, and daily. Those are the ones I'm actually trading. The other ones are just for analysis purposes. Anyway, let's get started with today's analysis. Okay, Euro USD. we're not going to get anything on Euro USD because it's already reversing. So it's a bit, you know, a bit late. It wasn't a tradable setup for me, but it is reversing. So there's no real potential to get into a reversal trade. GBP USD, let's check that out. GBP USD is in between two support resistance areas, which means there's no potential for a trade. I trade from support resistance, and that means, yeah, nothing there. AUDUSD, it looks like it might be forming into a continuation. I'm not really trading continuations actively at the moment, but it looks like it might do something like this. It's definitely stalling at this resistance area. So I'm going to keep a close eye on it, but it's not really a potential trade setup for me. Yeah, nothing much happening there. So let's look at USD CAD. USD CAD's on top of a support area, but that preceding trend kind of sucks. So I don't think there's much potential here. Again, this could be one of those continuation type setups, which I am not actively trading, but I am going to start this year. I'm already doing some tests on continuation trading. I used to trade continuations back in 2008, 2009, 2010, but I kind of stopped as market conditions started to change. The market really started to slow down after about 2009, towards the end of 2009. You know, volatility just started to drop a lot in Forex, but now volatility is picking up a lot again. And that means that continuations are becoming more and more viable to trade. So I'm starting to look at continuations again, but I don't really do analysis on them because I'm not, you know, I'm not that confident with trading continuations because I haven't done so for years and years now. And I don't really want to do analysis or teach something that I have not been trading actively myself for at least 2 or 3 years. So it's been a long time since I traded continuations. We're talking 2010. It's been 6 years. So, yeah, not actively trading them, and I can't really do analysis for them. But it does look like a potential continuation here. Something like that. So I'll keep a close eye on it. Now, please note, I just want to make this clear. I'm not saying that buyers are going to take control and price is going to push up. I'm saying there's potential for a continuation. So please do not jump into a long trade because nothing here suggests that you should be jumping into a long trade. Nothing suggests that you should be buying right now. There are some signs that maybe in the coming hours, there might be a potential long setup forming if you're looking for continuations. But right now, that's not happening. So don't blindly jump in. I just want to make that clear because I know people sometimes just, they hear me say, oh, this might happen. And they're like, okay, I'm just going to jump in. Don't do that, please. New Zealand USD. Nothing. USDJPY. There's an open trade on USDJPY. It was a long trade starting down here. A few people in the advanced course took it. This one here, long from around about there. Very good risk to reward ratio, this one. Because some people entered on a retrace. So after this broke, the entry was triggered, but some people waited for it to fall back down to about here, which has allowed for an amazingly good risk to reward ratio on this trade. And it's just kept moving up since then. So it was a very good trade setup, especially if you entered on a retrace. My point being, the reason I'm talking about this as a trade setup is because there's a long setup active, you know, there's no real potential to take a trade here. You can't really take a short trade when there's a long trade active. So yeah, there's nothing really happening here. One thing I will say is when buyers hit this level, might potentially get a short trade because this is a pretty strong level. It's had several bounces in the recent past. So that's something to look out for. But right now, there's nothing really happening on USDJPY. GBPJPY. In between two support resistance areas. Not much potential for anything here either. Next, EURJPY. Ooh, finally we have something that might be decent. Check it out on the daily. 12-hour. So what do we have here? What do we have here? I'm just going to say this right out. Not really been a big fan of EURJPY lately. Not sure if I want to take this trade because I'm not really liking EURJPY, but there is potential here for a trade setup. Some potential. Let's check this out. It's not going to happen until Wednesday because this is a daily chart and we need this candle to close. Oops, that was wrong. It's a bit of a tricky one. Now, let me explain why I think this is a bit of a tricky one. Risk to reward ratio is only 1.84. If your stop loss is there, which is a reasonable stop loss, so your stop loss would be at 127.60 or thereabouts, your entry would be at roughly 126.80. Now, why am I setting my target here? It's because of the minor support resistance. Last time price tried to move down to here, it got stuck there. So I don't want something like that happening again, price getting stuck there and bouncing away. So I'd want my target there. But having my target there means that this trade would only have a 1.84 risk to reward ratio. So it's not really an ideal setup. I'd want to see at least a 2 risk to reward ratio. So my target would have to be down here. And when it's down here, it's pushing it a little. You know, the lower you're getting into this area where we've seen some minor support resistance recently, so we've seen a recent bullish bounce from here. The lower you get into this area, the harder it is going to be for you to hit your target. So we want price to push all the way down to here just to get a 2 risk to reward ratio. So I'm not sure. I'm not really sure. I'm going to keep an eye on this. I'm going to keep an eye on EURJPY, but not really the most ideal trade setup. Looks like it's forming on the 8-hour too. Better potential for an entry on the 8-hour. You could get in around about here. This one might be okay on the 8-hour, but I don't know. I'd rather it form on a higher time frame. 12-hour looks okay too, actually. You know, we can get a nice risk to reward ratio on the 12-hour. So see, this is a 2.05 risk to reward ratio, and it's kind of within an acceptable part of this minor support resistance. So this is the minor support resistance. So it's acceptable around about down here. Yeah, because see, the daily gives us that slightly lower entry there. But on the 12-hour, we can kind of start to see a slightly better entry. Yeah, this is doable. I'll keep an eye on it on the 12-hour too. It's about 7 hours, 28 minutes until this 12-hour candle closes. I'm going to keep an eye on this one. It has potential. So yeah, I'll keep an eye on it on the 12-hour and the daily. So there we go. There's a potential trade setup. It's only one and it's not a great one, but hey. It is only Tuesday, so that's good for a Tuesday. Nothing on AUDJPY. Check out USDCHF, but there's nothing here because it's in between 2 support resistance areas, so there's no potential for anything. Whatever, nothing there. Euro AUD, show me something. No, you're not going to show me anything. Euro AUD is not going to show me anything. Oh well. Euro GBP. Now we're getting to. I'm not going to do analysis for these pairs. I don't really actively trade these pairs that much, so yeah, let's just not do analysis for those. Now, I promised that I would talk about something. You know, if we didn't find any tradable setups, I promised I'd talk about something. That way, you haven't wasted your time with this analysis. I mean, we did kind of find a potential tradable setup on EURJPY, but it's still 8 hours till it closes. And even when it closes, it's not a fantastic setup, you know. So I need to talk about something. You know what would have been a great idea? If I'd come up with something to talk about before starting this video. That would have been a fantastic idea, because now I'm on the spot and I need to think of something. Losing streaks. Let's talk about losing streaks. Wait, let me get a losing streak calculator up. All right. Yeah, let's talk about losing streaks. So, this is actually a pretty interesting subject to talk about. I've been talking recently to one of my students on Skype, and he was very unhappy because he lost 3 trades in a row. And I said to him, 3 trades in a row, that's nothing. Losing 3 trades in a row, I know it sucks and it hurts. I mean, it does hurt to lose 3 trades in a row. I don't like it either, but it's nothing. 3 trades in a row is normal. It's acceptable. And it's nothing to be worried about, but he was worried. He was concerned about losing 3 trades in a row. And I tried to explain, you know, you shouldn't be concerned about losing 3 trades in a row. Losing 3 trades in a row is normal. And how do I know it's normal? Well, in the advanced course, there's this thing we call losing streak calculator. And let's check out the losing streak calculator. I'm just going to show you, I'm just going to put some numbers in here. So let's say, you know, you're trading with a 65% success rate. So 65% of your trades are winners. If 65% of your trades are winners, it's statistically normal for you to have 4 losing trades in a row in your 100 trades. So it's statistically normal for you to lose 4 trades in a row. If you lose 4 trades in a row, it's just normal. It's not anything abnormal. It's not anything out of the ordinary. And you shouldn't even be worried about that. You shouldn't even be concerned. That's just normal. That's just going to happen in the course of events. With a 65% win rate, if you're taking 100 trades, there's going to be several times in which you have 4 trades in a row lost. It's just statistically normal. You should only be concerned if you lose more than 8 trades in a row. So you should only be concerned if you lose more than 8 trades in a row in the last 100 trades. That's when your losing streak starts to extend a little bit too long, and you might want to start looking at, are you potentially doing something wrong? Is your risk and money management good? Is your trading psychology good? And most importantly, is your trading strategy good? So my point with this is, losing streaks in Forex are normal. I used to be of the opinion that if you lost 3 trades in a row, you should take a break to calm down and relax. But these days, my opinion on that is changing. My opinion now is that you should just keep trading, because if you keep trading through your losing streaks and you just keep trading and trading, you're going to break out of that losing streak eventually. And as long as you keep your money management, you know, you keep the right money management, you stick to your money and risk management plan. So you don't start over trading, you don't start revenge trading, you don't start risking more just to try and recover from that losing streak. You just keep everything as it's supposed to be. You follow your risk management plan, you follow your money management plan, and you follow your trading plan, you follow your strategy, you follow all your plans and you stick to them. You should just keep trading. If you're able to do that, you should keep trading. And that can be tough. You know, trading psychology is one of the most important aspects of trading. You know, I would go as far as saying that great traders have 3 skills. They've mastered 3 skills. They've mastered trading strategy, they've mastered trading psychology, and they've mastered money and risk management. They've mastered those 3 skills. Now, I feel that I've mastered 2 of those skills. I feel that I've mastered my trading strategy, so price action, and trading psychology. with risk and money management, personally, I only knew the basics for a long time. Up until 2 years ago, I only really knew the basics of risk and money management. I thought I knew enough, but the truth is I didn't. And it was holding me back from being a great trader. I mean, I'm not saying I'm a great trader now. I'm just saying I'm more on the road to becoming a great trader now than I was 2 years ago when I just had the basics down of risk and money management. So where are you at? I mean, if you really think about it, where are you? You might have a trading strategy, but do you have the trading psychology down? Do you have the risk and money management down? Because if you don't have all three of those down, you're never going to be a great trader. You could be profitable. I mean, I was profitable. I've been profitable for years and years and years now, year over year, but I could have been more profitable. I could have been a lot more profitable if I had my risk and money management down. I could have been a lot more profitable if I understood some basic things like this here, like this calculator and all these calculators here. Expectancy. If I understood these things better, if I had a better understanding of all these things, I could have been a much more effective, much more efficient trader for the last 10 years. But I was profitable, but I wasn't as profitable as I could be. I wasn't as efficient as I could be. So anyway, I'm getting a bit sidetracked here, but my main point is just keep in mind that losing streaks are a normal part of trading, and losing streaks are to be expected in your trading. And you can't freak out when you lose 3 trades in a row. You have to stay strong through your losses. And that is a major part of trading psychology. It's a very important part of trading psychology, being able to handle your losses. So a 60% win rate is pretty normal. Even let's just say a 50% win rate. A 50% win rate for a new trader is pretty normal. And you could be massively profitable with a 50% win rate, because if you're making 3 times on your wins what you are losing on your losses, you're going to be very profitable with a 50% win rate. So 50% win rate is acceptable, and it is normal for a new trader. I set my aims higher than that personally, but if you're winning 50% of your trades, you are doing good. You're in a good position. As long as your risk and money management is good, as long as you're winning a lot more on your wins than you're losing on your losses, 50% strike rate, 50% win rate is good. So with a 50% win rate, over the course of 100 trades, it's statistically normal for you to lose 7 trades in a row. Now, are you going to be able to handle that 7 trades in a row? Losing 7 trades in a row? If not, then your trading psychology is not as good as it could be, let's say. And you need to get to a point where your trading psychology is strong enough to withstand that. Because if you lose 4 trades in a row and you start thinking, well, my trading strategy sucks, I need to change my trading strategy, something's wrong with my trading, I need to change it, then you're going to start making one of the most common mistakes in trading. And that's jumping between trading strategy to trading strategy, making changes. Making changes to what you're doing is one of the most common mistakes in trading, because when you start trading, you need to come up with a trading strategy. And of course, I'm going to say my trading strategy is a good strategy. Come up with a trading plan, and come up with a risk and a money and risk management plan. And when you have those things, you need to stick to them for at least 100 trades. You need to stick to them, because only after about 100 trades are you going to have the statistics you need to see where you're going wrong, what mistakes you're making, and then you can improve them. But if you freak out after 4 losses, which is statistically normal to have 4 losses in a row, if you freak out after only 4 losses and you start making changes, you're just always going to be making changes to your strategy. You're always going to be changing, always going to be changing. Free losses. Oh no, I've taken free losses. I need to do something different. You change your strategy. Then you take another free losses inevitably at some point, because it's statistically normal to take free losses, 4 losses, 5 losses, 6 losses in a row. It's statistically normal. Because it is statistically normal, it's going to happen at some point. You're going to take those losses and then you're going to change what you're doing again. And you can't do that. That's why I love this losing streak calculator, because when someone complains to me that they've taken 3 losses in a row, I link them to the calculator and I say, hey, it's statistically normal. When you look at the math, it is statistically normal for you to lose 3, 4, 5, 6, 7 trades in a row. And if it's statistically normal, it's nothing you should be worried about. You should only start worrying when you're losing like 11 trades in a row. That's when it starts to get like, okay, you know, something's wrong here. Even then, you don't want to change what you're doing. You know, you want to analyze what you're doing. You want to take a look at it, see if your trading psychology is right, see if your numbers are right, your risk and money management. That's very often a problem when you're not managing your risk properly. You don't want to make any major changes, but you want to assess what you're doing and see if you're doing anything that's very clearly wrong. But I guess my point is, losing streaks are normal. Losing streaks are normal in trading, and you need to be able to get through them. If not, then it's going to be very tough for you to become a successful trader. So even with a 70% strike rate, your losing streaks, you're potentially going to have 4 losing trades in a row. Statistically, it's normal for you to have 4 losing trades in a row. And you should only really be concerned if you're losing more than 7 trades in a row. And even with an 80% win rate, let's look at those. It's statistically normal for you to lose 3 trades in a row. So even if you're winning 80% of your trades, which is tough to do, some would say almost impossible, it's still statistically normal for you to lose 3 trades in a row. So think about that also. And I'm going to wrap this video up now, but think about that. Think about, if you're winning 80% of your trades, it's statistically normal for you to lose 3 trades in a row. So if you're only winning 50% of your trades, why are you freaking out over losing 3 trades in a row? You shouldn't be. Because even a trader that's trading with 80% accuracy, which is crazy, even a trader that's trading with 80% accuracy, statistically, they're going to lose 3 trades in a row. So if you lose 3 trades in a row, and I'm going to say that 99.9% of you are not trading with an 80% accuracy. So even if you were theoretically trading with an 80% accuracy right now, it would be statistically normal for you to lose 3 trades in a row. So if you're only trading with a 60% accuracy, then losing 3 trades in a row is nothing to get worried about at all. So there you go. Hopefully that allowed you to kind of understand a little bit more about losing streaks and how they're not really as bad as they seem, and that you need to stick to your strategy and you need to stick to your plan and you need to see it out. But anyway, I hope this video was useful. Like I said, I hope this video was useful. We're coming up on 30 minutes. That's a lot longer than an analysis video should really go for. So I'm going to leave it at that. Thank you for watching the video. Hopefully the EURJPY setup turns into an actual proper trade setup. And if not, there'll be some analysis tomorrow. And Wednesdays, we usually do find some good trade setups. So I'll see you for tomorrow's analysis.